5 top investors who profited from the global financial crisis. You can't understand the philosophy and actions of successful investors without first getting a handle on the financial crisis. What happened in the run-up to the collapse and the Great Recession that followed remains imbued with the memories of many investors and companies. Many investors saw their portfolio values fall by as much as 30%. Sales resulted in rock-bottom prices, removing all future profits that buyers would have made without the crisis. John Paulson. He was renowned for a spectacular bet against the U.S. housing market during the credit crisis. This timely bet amounted to an estimated $15 billion during the crisis for his firm, Paulson & Co. In 2009, he quickly switched gears to bet on a subsequent recovery and formed a multi-billion-dollar position in Bank of America, as well as an estimated 2 million shares in Goldman Sachs. He also bet big on gold at the moment, investing extensively in Citigroup, J.P. Morgan Chase, and a handful of other financial institutions. Warren Buffett. In October 2008, Warren Buffett wrote an op-ed article in the New York Times stating that he was buying American stocks during the decline in equity caused by the credit crisis. His derivation of buying when there is blood in the streets is to be fearful when others are greedy, and to be greedy when others are fearful. During the credit collapse, Buffett was especially skilled. His purchases included the purchase of $5 billion in perpetual preferred shares in Goldman Sachs, which paid him a 10% interest rate, and also included warrants for the purchase of additional Goldman shares. Goldman also had the chance to repurchase the securities at a 10% premium. He also bought billions of convertible preferred shares in Swiss Re and Dow Chemical, all of which required liquidity to get them through the tumultuous credit crisis. As a result, Buffett made billions for himself, but he also helped steer these and other American firms through an extremely difficult period. Jamie Dimon. Although not a true individual investor, Jamie Dimon used fear to his advantage during the credit crisis, making huge gains for J.P. Morgan. The height of the financial crisis, Dimon used the strength of his bank's balance sheet to acquire Bear Stearns and Washington Mutual, 2 financial institutions that were destroyed by huge U.S. housing bets. J.P. Morgan purchased Bear Stearns for $10 per share, or around 15% of its value, from early March 2008. It also acquired WAMU in September of that year. The purchase price also amounted to a fraction of WAMU's worth earlier in the year. From its downfall in March 2009, J.P. Morgan's stock has more than tripled over 10 years, making shareholders and its CEO quite wealthy. Then Bernanke. As the head of the Federal Reserve, he was at the helm of what turned out to be a crucial period for the Fed. A 2011 article reports that the Fed's income rose to $82 billion in 2010. This included roughly $3.5 billion from the purchase of Bear Stearns assets, $45 billion from $1 trillion in mortgage-backed security purchases, and $26 billion from government debt holdings. The Fed's balance sheet tripled from an estimated $800 billion in 2007 to handle deflation in the financial system, which seems to have performed well in terms of profits now that things have returned more to normal. Carl Icahn. Carl Icahn is another legendary fund investor with a stellar record of investing in troubled securities and assets during downturns. His expertise is in the purchase of companies and gambling firms in particular. He sold the 3 properties for approximately $1.3 billion, many times his original investment. He began negotiations during the credit crisis and was able to secure the bankrupt Fontainebleau property in Vegas for approximately $155 million, or about 4% of the estimated cost to build the property. In 2017, Icahn ended up selling the unfinished property for about $600 million to 2 investment firms, making nearly 4 times its original investment. Keeping one's perspective in a time of crisis is a key differentiating factor for investors. When more normalized conditions return, savvy investors will be left with substantial gains, and those who are willing to repeat their earlier successes in ensuing downturns will end up rich. Enjoyed the video so far? Don't forget to press the like button. It greatly helps out the channel. Also subscribe and click the notification bell icon for more content like this.